Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome on in and good morning on Tuesday, February 23rd, where we have some exciting trading going on in front of options expiration and COMEX deliveries this week, too. And sure enough, fortunately, sometimes things turns out they are predictable. Here we can see today's spoofed silver chart. And as you can see, the red line yesterday where it was above $28. And I did a video talking about how there was a large call option position at the $28 mark. And usually the banks are short that historically. And that it seemed surprising to see the price of silver going above $28. And that at least given the conditions, given the options expiration, given all the attention placed on this particular COMEX delivery cycle, that you could expect the wrath of God hammer to be dropped. And sure enough, it was. Interesting chart here, which I'm sure the CFTC is examining at this exact moment. Let's take a look here at the futures quote, which is interesting because you see it's down below $28 in the March contract now. Coincidence as that may be. And I don't know, maybe it's connected to this news that Fed's Powell says support for economy needed for some time. So yes, I guess that means more money printing on the way, which would explain why investors, I'm sure everybody watching at home, first of all, I'd like to say thank you for tuning in. I know everyone's trying to sell their silver on that news that in case you didn't realize yet, the Fed's going to print more money. And here's an interesting chart. This is the volume chart. And first, before we go any further, quick note from yesterday. It does appear like this spike was a glitch. Did not see that on any other charts. So wanted to offer a quick update there. Although this one does seem a lot more accurate because you see here silver above $28 and then let's see around what time was that. Yes, 4 a.m. New York time when liquidity is the thickest, obviously, when the markets are closed. Makes sense. And you can see a lot of volume and the price drops off a cliff again right under $28. Although I know you're thinking, Chris, what are you talking about? 27.92 cents silver. Yes, fortunately, after last night's mishap with that chart, I was a little more careful because this was about 9:10, and then right before we were getting Central Time ready to go live, there was some more spoofage. Actually, so you can see this one that brought it down to 27.40. So if you thought this that brought it down below $28 was big, look how they just blow that out of the water, make that look like child's play. Maybe a lot of customers were buying SLV shares and the ETFs are hedging again. You never know with these things. But actually, before we get to that, I don't want you to think, well, how could he have known this in advance? How could he have said this yesterday? I mean, fortunately, don't worry. Don't worry. Wasn't out there with my Ouija board and anything like that. But actually, we can explain exactly how, because fortunately enough, it's so easy that even a regulator could have seen it if they were only looking. But let's just not take my word for it, but hear what me said yesterday. That I'm looking at it right. Again, you can make your own conclusions, but it seemed that typically based on this, that you would have expected, and this being a large 955 contract open interest on the 28 strike call, which traditionally the banks are short, meaning that they lose a lot of money if the price goes over $28 today, but they get to collect the entire 100% of everyone's premiums. So all those times I talk about getting clobbered over the last 10 years on, I didn't do the futures in futures options, but same principle. So anyway, we'll continue on for a moment here. Smackdown before $28. Again, keep in mind that there is still time on the clock. It has not expired yet. And it's just my guess. You would think that there would be like a wrath of God paper dump on the markets in the next 24 hours. here are the puts. So obviously, it wasn't a complete mystery, but you would think the CFTC is definitely looking at it. And yeah, that's right. I'm going to do it again. I know some of you have seen it. Why would Chris keep playing this clip?
Again, I appreciate
of a former CFTC commissioner who actually said that the market was rigged back in the CFTC's previous investigation when they said they found nothing, and then later admitted they found hundreds of thousands. But let's see if there's any way anybody else could have guessed actually what happened here.
Again, I appreciate you mentioning the spoofing. Curious, because my understanding of how some of the manipulation has occurred is that, if silver is trading $20.05, there's a lot of stop orders placed around the $20 handle. So often if the price can get pushed a little bit, then you get a lot of those high frequency algorithms kicking in, and then you'll see a drop with many feeling that people kind of nudging a little are then able to buy lower. Does that sound like a reasonably accurate portrayal of?
I don't know. Is it reasonably accurate? Close? Am I in the ballpark?
Put it in perspective to folks, or would you phrase it differently?
Well, it's a good portrayal, but it's a very good portrayal.
Followed by
seconds. So the difference in your description is that today, when a market moves because of a spoof, it can move a lot more.
Wow, goodness. I mean, it's like Bart was telling us exactly what was going to happen on this particular COMEX silver options expiration cycle. So given that the CFTC has a mandate to uphold and protect the integrity of the markets, I'm sure their office is humming, and that the commissioner who is signed up to go to a climate change panel, I'm sure actually maybe he didn't cancel that because there was JP Morgan, the Fed, and some senators at that meeting too. Hopefully that's what they will discuss. Anyway, quick look, you still see that 9:55 on the option board. And like we said, there's some time left on the clock. So I'm not saying this will happen, but I may just eat my breakfast and fantasize about silver at $31 in 3 hours, and bankers eating some short vol on the 30 line, and other things I do to amuse myself and relive the glory option days. Again, a reminder, that spike yesterday's chart, share this, tell your friends, and let them know. Sorry about that. I thought it looked weird, and anyway, we'll make sure you know about it. Two last updates before we wrap up. Here we go we have an updated open interest, 47,000 contracts still, which is about 250 million ounces of silver. Am I getting that number wrong? I mean, geez, maybe my mock trading math is off a little bit. That seems awfully large given how close we are to the deadline, but I'm sure that Silver Squeeze Twitter hashtag counts are down. Most likely the most important metric any investor could look at this particular point in time. But here is, oh no, we got two more, but they're quick. Interesting. You see First Majestic, silver stock you may have heard of. We did these recordings on my conspiracy theory channel right back here. What's up with the short position on First Majestic Silver? There's a month ago. Did a couple of videos throughout that. Since then, if you go back on the page, you can First Majestic short squeeze happening now. A short squeeze is on, but typical Wall Street, it didn't explode on the first day. But what I found interesting is that the short percentage when we're doing that, you can see it in the video, I'm not making it up, it's 23%. Now that the short percent of float shorted is down to 10.85%, I'm sure there's no connection to the price being $5 higher than a month ago, despite silver, thanks to the massive $200 billion outflow annual production basis that Jeff Curry alerted us of last night. I mean, I see what I was missing now. So anyway, I'm sure that's unconnected, that the short position has gone down and the price of First Majestic is going up. wonder if that concept could be applied in any other markets in today's financial infrastructure. But fortunately, the good news as we wrap up is that just on time, I didn't even get to see it yet. This is my commitment to my audience. I came and talked to you first because Jeff Curry was on TV again this morning and he sees richer commodity demand growth. Well, gee, I hope for the whoever is short these options there, I hope that demand growth doesn't happen today and someone has to reverse hedges or anything like that. But I didn't even get to dig into the insight that Jeff shared today. I'm sure it's incredible. I did listen to a couple minutes of his 50-minute podcast on short squeezes, which, geez, only a few minutes in. It's educational beyond belief. I'm learning so much. I'm going to take notes. Someone in the Wall Street Reddit group, where I know the CFTC is examining, actually even wrote a detailed recap of Jeff's podcast. Maybe they'll find that the CFTC can find that person and read it because he seems to leave a lot of clues. But anyway, with that said, I'm sure there's more important things everybody has to do rather than hear me make jokes about Jeff Curry and Goldman Sachs analysis. So with that said, gonna wrap up. Just a little primer for the rest of options expiration today. Go have fun. Don't hit the Kitco refresh button too often, but just hit the subscribe and notification bell right here. And that way you will stay posted as soon as it happens.